Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to continue the development of the theme that I started yesterday, looking at the market to see whether we are actually in a 12-month bear market or will we actually turn this around with the price going above the 46,000 threshold that I've been talking about for many weeks. But before I begin, the usual disclaimer, please remember everything in my video is for educational purposes only. Nothing should be taken as financial advice. Please do your wider research before you make any investment decisions. So with that out of the way, I'm going to start off today with the daily chart here. And what we have is the white line, which is the 50 daily simple moving average, and the green line, which is the 200 simple daily moving average. These are our two tops that we had at 64k and 69k. And the reason why I'm showing you these two averages is because it's unprecedented to have these crosses here during a bull market. So then by default, if these don't occur in a bull market, then they must occur in a bear market. All I'm doing is giving you my perspective. I'm not saying we're definitely in a bear market or a bull market. My actual view is 70-30 in favor of being in a bear market at the moment because of the way the price action has been developing over the last 3 months. And that's just deducing from the market and how the price action has been playing out. And part of that is these things which seem to confirm that view. And that is that, so as we can see here, the white line crossing the green line, i.e. the 50 simple moving average crossing below the 200 moving average, is commonly termed as a death cross. And then after the 69k, we've now recently, back in January, got another death cross here. And the reason why this is significant is because when you look historically and put it in the historical context, it gives you that bit more clarity. Obviously, everybody has to make up their own mind as to how they interpret these things. But my view is that if we go back to the previous cycle, back in 2015 here, we had the golden cross at around about the December 2015 mark. And since then, the two lines, the 50 and the 200, were always separated. They never crossed during the run up to the end of the bull market in December 2017. And the only time they crossed, i.e. the death cross, was after we topped out here. So that was the characteristic of the previous bull market. Then if we go further back, the first cycle ended in November 2013. And again, as you can see, the white line never crossed the green line right up to the end of the bull market there. And it only crossed after the bull market ended there a few months down the line, down here. So each of the previous two cycles, the cross only came after the top off. And currently here, as I've just shown you, having these crosses in a bull market is not characteristic of a normal bull cycle that we've had compared to the two that we've had in the past here with Bitcoin. So make of this what you will, but it does add to the weight that this dominant trend that we've had maybe is the start of a longer downward trend. And as I said, I'm always neutral, and if I see a sign that the market's now turned round, then I'm very happy to change my perspective on this. And what will change my perspective is basically this level here. If we can get above this 46,000, as I said in yesterday's video, so we're currently having a big rally here from around about the 37,000 up to the 43, 44,000. If we were to run above the 46 and have a close on a daily candle above the 46, then I would say then this narrative then is invalidated simply because we would have created a higher high here. So the trajectory, instead of being down, would then be to the upside here. So we'll just have to wait and see what develops. My perspective on the market. And until we get past the 46,000, I remain bearish because that's what the price action is telling me. Going back to the tweet I mentioned yesterday, so on the February the 25th, I made this tweet, which was based on these candlestick patterns that I look at. And basically what I said there was that ignore candle 2 at your peril. Candle 2 has the same power to push markets higher in the short term as candle 1. As you can see, the candle 1 here pushed the market right up to around about the 40,000 mark. And then that went on to hit the 45,500 mark. And based on that narrative, I basically said about the candle 2 here, which looked very similar to the candle 1, that expect a pullback to 36,300, which is this chart that I actually posted. And the price actually came down to 37,000. So we had a run up And then we had that pullback, which is what I was expecting here. And then I said, after expecting a pullback before the next attempt at 46,000, and that this seems a reasonable probability to play out on a 60-40 basis, only time will tell. So on the chart, basically, this is the candle, which I was mentioning, compared to this candle here, that it has the power to move the market up. And then we got this gravestone doji candle here, which I mentioned yesterday, that once we get a pullback down to the 36.5 level, it went to 37 as I said, then expect a run up back towards the 46,000. So we still haven't met this 46,000, and this will be the line in the sand for me on the upside. I mean, if you're interested in catching up some of the information that I give out on the tweets, then the Twitter page is always advertised below all of my videos in the description box, as you can see here. So currently we're running up back towards the 46 mark here. We'll see whether it gets there or not. However, if we zoom out and put a trend line on here, take it from this point there all the way through to this one. So what we've got is a resistance on this diagonal line. As we know, diagonal lines are not as important as these horizontal support and resistances. So we'll see whether we can get past this. If we do, then 46 is definitely on. I would expect a very strong rejection at below the 46,000 mark here. But should we get above it, then I'll be back all in, because then the next level is going to be, of course, this level here. As you can see, this is the $52,000 mark here. Once we get above the 46, it's a very simple and easy run up to the $52,000 mark here. So we'll wait and see what happens. The main thing is to just keep an open mind and let your judgment about what's happening in the price be dictated by the price action. And nobody knows the price action from 1 minute to the next. And that's why it pays to be neutral. And as you know, I was dollar cost averaging down here. So these are good points for me anyway to take profits. And I'm happy to do that. But certainly there is only one key level left here now under the circumstances, and that is this 46,000. Should we get above it, then I'm going to be absolutely all in to ride it back up. That would be a sign that there is a reversal that's taken place over here. Okay, so if we have a look at the larger term time frame on the monthly chart here, because we had the monthly candle close last night, of course. A very interesting candle. So what we've got now is an inside bar candle here, which basically means the high of this candle and the low of this candle encapsulates the following candle. And that is, of course, bullish in nature, simply because what you've got here is a downtrend continuously coming back down, whereby each candle breaks the low of the previous candle, i.e. here. And this candle is telling us that this downtrend is now coming to an end because this candle did not break the low of the previous candle. Its low and its high was contained within it. So that means that we now have an introduction into the market of more buyers who are willing to buy up at these levels here. And the reason why I've got this line drawn here at the top of this wick of the monthly high that we've got here is that should the current candle close above this level, i.e. the 46,000, as I've been mentioning for many weeks now, that would be the start of a bull run there. And that's why it's important. It's the threshold. It's the line in the sand on the upside. That would confirm that the reversal has now taken place here. So until then, the narrative is still to the downside because that is the dominant trend. So look out for that. Also in yesterday's video, I mentioned this 8 EMA, the blue line here, the blue moving average, the 8 exponential moving average. And once again, we closed below it. And unless we get above that, then the trend is still to the downside, unfortunately. So we'll see what happens. We've got the current candle here that's hovering just below it. But we need to keep an eye on this because once we do manage to get above this 8 EMA, it has a very powerful way of taking the price higher. As we can see from here, once we got above the COVID-19 situation here, at no point did we close below this 8 EMA until we topped out after the 64,000 here. And when we did manage to get above it, we went on this big rally to the 69 from down here at 28,000. So this has a power to move the markets to much higher levels. So we must keep an important eye on this. And on the weekly chart, the 8 EMA has just broken through here. So that's a really good sign, could feed into the March end result that we get with the monthly candle moving above the 8 EMA as well. But this is only the start. We're only at the beginning of the month, so anything can happen, but certainly it's a good sign. And it's the first time we've actually gone up since we broke down here back in November. And on the daily chart, we've gone above it again here. But we have actually been rejected a few times by going above it here and here, 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 and here. So we've made many attempts to try and get above this. So let's hope that we can continue with this above the 46,000 so we can see the market go much higher. The reason why these lower highs are worrying in this trend that we've had since November is because if you look left and in the last cycle, I remember back in December 2017 when we topped off here, at this point everybody was expecting a bigger move to the upside to the 50,000 and the 100,000. And when we came to this level, which created a lower high, people didn't believe that we'd come to the end of the market here because of the euphoria caused by this big move that we got here. Everybody was still in the mood for this to go much higher, but unfortunately the chart was telling us something different, and that's why it's very important to take the emotion out of the market and just look at the charts and how they're panning out. So once we got this lower high, we had a massive fall to the downside, and then we tried to come back up again. And once again, at this point, I remember people saying that we're back on our way now. We're going to be making our new all-time high very shortly. But once again, we got turned back at this point and created another lower high and another one down here and another one down here. And we continue to do that just like currently. And with that experience in my background, it makes you a little bit more cautious. That may be, just like here, it created a 1-year bear market all the way down to the lows here at 3,000. We just have to be careful not to get carried away with all relief rallies that we've been getting recently. On a bullish note, we are making this double bottom pattern here. And that's why I'm very hopeful that once we get above the $46,000 mark, that we can continue with the bull market. That's what I would really hope for. But at the same time, I'm mindful that we've been rejected at this level a few times now. Here, here, here. And currently we're just coming up to it here, so we may well break through, but if we don't, then we just have to adjust our thinking behind it. Okay, so I'll leave it there. Hope you found value in this video, and if you did, then please do remember to like and subscribe and to turn on the notification bell. And if you have any comments, questions or suggestions, then please leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.